Cathie Wood is back, and this time she's doubling down on Tesla. After a wave of Tesla sell-offs throughout May and early June, including 5 separate trades that trimmed ARK Invest's position, Cathie just reversed course. On June 27, 2025, she made a bold move, buying $13.6 million worth of Tesla stock, marking her largest buy in months. This isn't a random pivot, it's a calculated bet, and it speaks volumes about where she believes innovation is headed next. Cathie has long said that we're entering the most transformative period in history, driven by AI, robotics, and autonomous tech. Her latest trade signals a powerful conviction that Tesla remains at the heart of that revolution. This isn't just about EVs anymore. This is about autonomy, energy storage, and AI-powered logistics. In her view, Tesla isn't just a car company, it's an AI company in disguise. And that's not all. Alongside Tesla, she just picked up 2 more AI-focused stocks, both strategic plays in the infrastructure layer of this technological shift. In an economy riddled with uncertainty, higher for longer interest rates, and geopolitical tensions, Cathie is placing her bets not on defense, but on disruption. In this video, we're diving into her comeback buy of Tesla and revealing the 2 other AI stocks she just added. What do these trades tell us about her macro outlook, and what opportunities might they hint at for investors paying close attention? Let's break down the strategy behind the moves and why Cathie Wood believes this next wave of innovation is just beginning. Let's begin with what made her to shop Tesla again. After months of anticipation and years of development, Tesla has officially launched its robotaxi service in Austin. While it's currently limited to select users with upgraded FSD software, this pilot marks the beginning of a massive shift in Tesla's business model, from selling cars to offering mobility as a service. This isn't just a new revenue stream, it's the dawn of a recurring software business layered on top of Tesla's existing vehicle infrastructure. Unlike its rivals, Tesla's edge lies in vertical integration. It designs its chips, trains its AI models, builds its own vehicles, and now it's rolling out an autonomous fleet, all under one roof. That means faster iteration, lower costs, and a massive data advantage. Elon Musk himself noted that Tesla vehicles cost just a fraction of what a Waymo robotaxi does, thanks to scale and manufacturing efficiency. This cost edge allows Tesla to expand quicker and gather more real-world driving data, which feeds right back into its AI systems, accelerating progress. Yes, the initial rollout isn't without hiccups. Reports of lane misjudgments and regulatory scrutiny have emerged, but even skeptics admit the early rider feedback has been overwhelmingly positive, with users calling it a game changer. Analysts like Dan Ives say this could be the start of a $1 trillion autonomous journey, and Tesla is leading the charge. Importantly, this isn't just about hardware. Tesla's long-term strategy is centered on monetizing its software stack. Whether it's licensing FSD to other automakers, enabling ride-sharing on demand, or launching the fully driverless cybercab by 2026, each step moves the company closer to a high-margin, recurring revenue model. In a time of macroeconomic headwinds and global competition in AI, Tesla is positioning itself as a dominant infrastructure player in autonomy, energy, and compute. Cathie Wood's latest buy signals renewed conviction, and with Tesla's autonomous vision accelerating, the upside could be far greater than what most of Wall Street is pricing in. Next up is SoFi Technologies Inc., ticker symbol SOFI, one of the boldest fintech transformations happening right now. And Cathie Wood just backed that bet in a big way, adding over $40 million worth of SoFi shares across 2 of her ARK ETFs in a single day. That's not a quiet buy, that's a statement. What makes SoFi stand out in today's market is its complete shift away from the traditional banking model. Instead of relying heavily on interest income like most lenders, SoFi is rapidly becoming a capital-light, fee-based financial powerhouse. In its latest quarter, the company reported $315 million in fee-based revenue, a 67% year-over-year surge, which now accounts for 41% of its total revenue. This is driven by high-growth segments like interchange fees, its loan platform business, and the Financial Services Productivity Loop, or FSPL. And the best part? This is just the beginning. Strategic deals with financial giants like Blue Owl and Fortress give SoFi the ability to originate loans at scale without keeping credit risk on its own books. That means more revenue, lower risk. It's also seeing explosive member growth, up 34% year-over-year to nearly 11 million, and increasing engagement across its platform. About 1/3 of users are now buying multiple SoFi products, a sign that its ecosystem is sticky and expanding. While some may point to its premium valuation, there's a reason the market is willing to pay up. With a 36% compound annual revenue growth rate over 3 years and a 49% contribution margin in financial services, SoFi has room to reinvest and scale efficiently. Add in a projected $1.3 billion in annualized fee revenue and new products like Smart Start and SoFi Plus, and you've got a fintech platform that's evolving faster than Wall Street expected. Cathie Wood's buy signals confidence in SoFi's long-term disruption of legacy finance. And with interest rate volatility still hanging over the market, SoFi's capital-light recurring revenue model may prove to be one of the most resilient and scalable plays in fintech today. And finally, we have Qualcomm Incorporated, ticker symbol QCOM, an under-the-radar AI infrastructure play that Cathie Wood has been quietly but consistently accumulating. With 10 straight buys in 2025 alone, her conviction is clear. Qualcomm is no longer just a chipmaker for smartphones. It's becoming one of the most critical enablers of on-device intelligence, autonomous systems, and edge AI. The narrative around Qualcomm is changing, and rightfully so. The company is now positioning itself as the connective tissue between AI, connectivity, and computing across cars, PCs, and industrial devices. Its Snapdragon digital chassis is already embedded in major automakers like BMW and NIO, delivering integrated platforms for infotainment, driver assistance, and wireless connectivity. While NVIDIA dominates cloud-based AI training, Qualcomm is betting on the edge, where AI runs directly on the device. And that bet is paying off. Snapdragon X Elite, Qualcomm's latest PC chip, is at the heart of Microsoft's new Copilot Plus PC rollout. These machines are capable of real-time AI features like recall and live captions, all without relying on cloud infrastructure. With over 85 PC designs in development and 750-plus optimized apps, Qualcomm is moving beyond smartphones and into everyday computing. Add the new X85 modem-to-antenna platform, touted as the most advanced in mobile history, and Qualcomm is again pushing the limits of performance and efficiency. This evolution is supported by smart acquisitions, like Edge Impulse for industrial AI deployment and AlphaWave for chip-to-chip communication. The company is building not just chips, but a modular ecosystem for AI-driven devices. And while risks remain, from Apple's eventual modem exit to geopolitical pressure in China, Qualcomm's revenue diversification into automotive, IoT, and PC AI is gaining serious traction. With strong cash flows, shareholder returns, and a valuation far below peers like NVIDIA and Broadcom, Qualcomm offers rare upside for investors looking beyond the AI hype. Cathie Wood's continued buying isn't about nostalgia, it's about recognizing a company whose strategy is finally catching up to the future it's been building for years. Cathie Wood isn't just buying stocks, she's placing strategic bets on where the future is headed. From Tesla's robotaxi revolution to SoFi's fintech transformation and Qualcomm's rise in edge AI, these three companies represent more than just innovation. They're laying the foundation for tomorrow's economy. In a market filled with noise, her recent moves signal clarity. Autonomy, digitized finance, and decentralized intelligence aren't just trends, they're the next frontier. If you're watching where the smart money is going, it's not sitting on the sidelines, it's accelerating toward disruption. So stay tuned, because in the world of exponential innovation, the next wave is already building, and those paying attention now could be the ones leading it tomorrow.